All right, we are back. It's been the weekend. Gonna catch up on my trade from Friday, which I closed pretty much about 20 minutes after I finished recording the video because turns out I just was a pussy and didn't want to hold it over the weekend. And yeah, by the looks of it at the moment, looks like it was the right decision to make. So let's get involved, man. Right. So at the time, on Friday, previous daily high was up here. Market closed. This was then previous daily high coming in on Monday for, I think, for Sunday. No, it doesn't actually count Sunday. So, yeah, Friday was previous daily high here. This green line. As you can see, we've got these two areas, draws on liquidity marked. Price didn't even take one of them. Similar sort of reason on the Nasdaq. We did feel this imbalance, which is why, you know. Well, I basically let me just go over like what I went through on Friday. So pretty much, we're in the trade when I was recording the video around here, and then price started. Was it here? It was here or here, and then price started like just moving down a little bit, moving down, and to be honest, I just decided to close it. I closed it for, how many pips was it? Let me just get me broker statement up. So closed it for 114. Is that right? 114. I closed it for like £34, 67p. So yeah, I mean, considering I was aiming for like 400 something pounds and to close it at 34. I mean, at the time of the video, it did run up to about 100, 120 at one point. But yeah, I mean, it was one of them. One of the things I was thinking of was it was this external draw on liquidity here. Now, I know I gave all the confluences and all the reasons for me getting into the trade, but at the same time, you know, if the market's bearish, the market's bearish, and the fundamentals need to align. And me personally, after rewatching the video that I recorded and considering my position, I closed. So yeah, so we closed that out early. And then today I went into another trade. I took a short today on the S&P, I think. No, it was on the Nasdaq. Yes, this is my trade short. So my reasoning for this was we traded above previous daily high on, well, Friday's high. I'm cooked after work today. Yeah, so we traded above Friday's high, trade up into this imbalance, and then displace down, creating the inverse fair value gap on the 30-minute chart and also on the 1 hour. So you can see that very nice and clear. And yeah, we got, it was mainly this displacement candle here. Like that's quite a nice displacement for a move down. It does signal that we could go lower. And I was keeping in mind, you know, this external liquidity here. My original target was a previous daily low. But upon review, like after being in the trade for a while, like if you look here, that's what, 25,202, all the way down to 24,529. So that's like a 700-point move. Probability of that, not very high. Like within the day, do you know what I mean? It's for a Monday. But I was still bearish today. As you can see, there's been a bit of consolidation for the last few hours. Price has just sort of been going up and down since the AM session, London session. We've pulled back down again, and at this point, I don't really know which way it's going to go. So, yeah, in terms of the actual trade itself, I did have it set up. I'll go through each of my movements on the management of this trade. So this was the original lookout for it. 4.3 to 1. I just went in with 1 unit because on the Nasdaq more involved, and I think it was about £100 stop actually. So it was more like this. yeah, just less risk today. If I went in with 2 units, that would have been way over my risk, what I want to be working with. And yeah, simply because we still had that trade idea in mind here, I was like, well, if it does go wrong, then at least my original idea was correct and the model played out. And if it goes right, then, we can take advantage of that. So yeah, it's not to say that I didn't follow the model. Like, the model did play out today, or the entry criteria was there, hence the reason for getting in. And yeah, so as I was saying, we got the 30-minute, 1 hour inverse fair value gap, displaced down, break structure on the London lows, and then I think it was a 30-minute. I was counting this as the imbalance since we already wicked up into this, and we got the fair value gap here. So was that 5-minute? No, it was a 30-minute. So it was a bit more of a higher time frame entry rather than like a 15-minute or a 5-minute or a 1-minute entry. And yeah, to start with, price did sit in this fair value gap, which was expected. London session had just closed, or just finished, so we were in the limbo stage between London and New York, and there was a bit of consolidation, which I will just show you here. I was watching very closely around this level just to see if we were going to break upwards, and this here, these 3 5-minute candles, I was looking at the wicks very diligently, just to see what the reaction was, and hence my risk on for today. I was trimming the stop. I was managing this one a bit more because I knew after a while of being in it, and also identifying that it was like a 700-point trade, probabilities are reduced. So in terms of where I was moving my stop, so we got this push down here, this big candle on the 5-minute, that went down, which was nice. After, I think I came up into about 40 pound, 50 pound drawdown here. And then, yeah, we got this reaction downwards, which was very, very relieving. So from here, I moved my stop above this candle, just to take a little bit of risk off. And then I trimmed it just to the top of this imbalance, which I think is on the 30-minute. Yes, you can see that lines up with the bottom of the wick. And I was still wary that, because of this wick here, it didn't fully trade up into this imbalance. It could still trade up into that, but instead it went with this. And yeah, after a little while, I was thinking, you know what, because I've already reduced my risk on this trade, I dropped my stop loss down from about 100 quid to then 60 quid. And then my final chop on the stop was pretty much just above the imbalance, and I think this was about £30, £33 stop loss, or £40 stop loss. So yeah, I did move it to break even at one point. I went no, because we could just get wicked out, and at the point that my stop had been reduced, I also reduced my TP. I was looking at obviously this down here, and then I also thought, you know what, let's just go for this wick, low hanging fruit, target that, keep it simple. So actually it was about a 2.7, yeah, 2.76. So it was just around that wick there. So you had a bit of room for it to breathe. But yeah, as you can see, take profit hit 840, and from 8:30 I was thinking, right, so what normally happens before the AM session opens at 9:30 is you get a manipulation one way or the other. And as you can see, we did have we had a retracement here. I think that was a 15. No, it's a 3-minute. Which one was it? Which one was it, mate? I think it was a 30. Let's reset. Sorry, I've all over the place here. Yeah, I was expecting a breaker structure, and as you can see, we got that final push down, and I just closed out. I was like, right, that would do. and that was £111.19 profit today. So overall for the month, we are up 425. And in the last 3 months, we're down like 1,025. So full transparency, you see all the videos, you see all the reviews, see all the trades. It's just my journal. And yeah, ultimately, you know, although it wasn't a massive trade today and it wasn't the size trade I would have liked to take, it was still well managed and it was a good trade, and the entry criteria for the model was there. I'm not going to act like I 100% knew that this trade was going to play off, because I didn't. And that's the same with every trade you ever take. But I had this gut feeling that, you know, with all these fundamentals, you know, there's a lot of skepticism around the government at the moment in the US. The AI bubble, like everything going on, I was just thinking, you know what? I wouldn't be surprised if price does come a bit lower today, just to bait out everyone that thought it was going to jump up at the start of the week. I was also looking at higher time frames as well. 4 hour, you know, this imbalance got completely filled here. And it was the reaction off this imbalance being filled, if you look closely around the bodies of these candles here, right at the top of last week's opening gap. And then the inverse fair value gap coming there. It was a bit of a signal. So yeah, you can see the wick here as well. Like if you look at this 4 hour, went up all the way down, then back up again. So this 4 hour candle ends at 10 o'clock New York. And then from then, it's been a bit of consolidation, but now it looks to be that we are moving down. And to be honest, I don't really like how this is looking. So I was quite relieved to get out. I was looking at, you know, if I had gone with like a normal risk 2 units, like no, that's not right. It was for something like that. Yeah, so at the final point of this trade, that would have been, you know, 3% risk there. 174, 180 pounds is what I would normally look at. And yeah, that would have been a 481. But if I had had my stop, well, from my original entry with my stop up here, as you can see, that's fucking way over what you want to be targeting, especially for a 1-to-1. Doesn't make sense. You know what I mean? So, like I was saying, bit less risk today, but I'm still happy with the results. Not gonna, well, I'll put a bit of luck into this as an outcome, and just instinct. You know, we had this imbalance here by the breaker structure. I was thinking, you know, might be a reaction off this. And yeah, luckily I was correct with my decision to close early, because as you can see, from 9:30, price just jumped up and would have wicked us out at stop. So yeah, overall, not bad. I'm not mad about it. I'm not disappointed with it. Obviously, you can't be upset with profits. So I think this, if we put the 2 trades together, that's about £145. £145.76p, I think, something like that. So it's okay. It's less than a stop loss on a normal trade, which is, you know, something I'm aware of. And yeah, I mean, it's one of those. So we just take it as it is. And I think I'll be out of the markets for the next couple of days, unless, you know, we do get solid formation. I'll be waiting now. Well, at the end of today, we'll have Monday's range, so that we can use that as more of a confluence, just to determine our next bias going forward in the week. Possibilities that I won't trade for the rest of the week if I don't need to. You know, 425 on a month is fairly decent. I'm quite happy with that at the moment. Although I am off work on Thursday and Friday, so I'll be a bit more active, be able to fully focus for that. And yeah, so what is this? I lined something up here. What was I looking at? Oh, yeah. So from 11 o'clock, there was a reaction with the inverse fair value gap on the 5 minute here created. 11:25, that candle. And I was looking at this imbalance here, you know, inverse breaker structure here, and then the 5 minute imbalance. I was looking around here, thinking, maybe it could come up and target London highs and then go for this original draw on liquidity that we mentioned on Friday. But there's no need to get in another trade if you've already won for the day. There's just no need, especially considering how the trade was today. So it's just like, let's just we can draw this out. It would have been a 1.74 risk to reward, so it's not amazing, but yeah, as you can see now, this would have been stopped out, so we can get rid of that. And in terms of news, let's have a look. So we had Canadian CPI, a couple FOMC members speaking. We've got a bit more FOMC. Oh, and Trump speaks at 11 p.m. UK time. So likely don't want to be in the market for that. Tuesday, tomorrow, all yellow. Wednesday, FOMC meeting minutes at 7 p.m. London CPI year on year. Thursday, we've got unemployment claims as usual, non-farm employment rate, unemployment rate, earnings. And Friday, a few more bits and bobs, PMI, GBP, PMI as well. A couple of Euro ones. So, yeah, one of those. Overall, I'm happy with today's trading. I'm happy that I managed it well and I did the right decision in closing early and just walking away with my profits. Didn't try to stretch it out too much. I think once I had trimmed the stop and I still had the TP down at previous daily low, you can see it was like a 9.8. And if you think I trimmed at one point, I had it like this, so it was like a 10 point something. It's a lot of risk to reward. Like, it's a good risk to reward, yeah, fine, but you then open yourself up to more risk of getting stopped because you're waiting for a bigger move, which is just more risky, particularly with this idea in mind. So I think that's going to be it for me today. We'll come back tomorrow, see what's going on, and yeah, I will see you then. Trade safe, trade smart, and trade your plan. Common sense, mate.